look at the Shanghai Composite. We've got 29 minutes and 30 seconds to go till the data comes out from the Bureau of Statistics, and that's why we could see a very cautious first half hour of trade. In fact, the Shanghai Composite is just putting on 0.1%, 3,168. Trading volume was already lower yesterday in anticipation of the data yesterday on worries about overheating and also what the government may do in anticipate after the data comes out. Of course, we've got leaked data from Reuters that GDP grew 11.9%, which would be a 3-year high, and we've got some power generation and property investment figures for the first quarter showing that the economy did recover very strongly in the first quarter. But CPI reportedly rose just 2.4%, which wouldn't really be high enough to raise immediate tightening concerns, and that's why many economists are expecting a rate hike possibly later down the track in the second quarter. We've also got fixed asset investment and industrial production figures coming out, and they're likely to be above expectations. Given the above expectations, the stronger than expected GDP figure. Of course, we did have some rhetoric coming out of the government, the State Council setting priorities for the economy, the agriculture, liquidity management, stabilising price levels and curbing property price rises as the 4 key ones. So fears of imminent policy moves on property could hurt property stocks. Let's take a look at some of the property developers this morning. The sector sub-index isn't moving very much, as similar to the other sectors, but property stocks are definitely in focus today, of course, because of the data. Back to you, Martin.
Okay, thanks so much. Leo's mentioning the data. We're still counting down. Now, let's see, 27, less than 28 minutes away. A clutch of numbers out. Reuters sources are reporting that China's economy expanded 11.9% first quarter. If confirmed, that would be the fastest pace of growth in about 3 years for China. Now, the data likely to fuel speculation about more monetary tightening by the central bank, the PBOC, or possibly even a strengthening of the currency, the renminbi. Take a look at the one-year NDFs, non-deliverable forwards. They continue to strengthen from yesterday's close, 66220. Right now, they're sitting at 66130. There you go, implying about just over a 3% appreciation of the Chinese currency. Qing Wang is Chief Economist, Greater China, Morgan Stanley, joining us live out of our studios up in Hong Kong. Qing, great to see you. Thank you for your time. Let's get right to the data first. What are you looking for the headline Q1 GDP number, and of course, possibly even more crucially, what CPI is going to say?
Well, we are expecting GDP growth will be around 12%, and CPI inflation for March will be around 2.5%. So this is a mix of high growth and low inflation, a Goldilocks scenario. In fact, we have been expecting a Goldilocks scenario for 2010 for Chinese economy since late last year. We will be very happy to see this set of data.
So not too hot, not too cold, Goldilocks scenario. What does that imply then? What does that suggest in terms of what they might or might not do in terms of tightening monetary policy?
I think in the near term, if our inflation forecast materialize, this will lower the risk of imminent policy change. For instance, either reserve ratio hike or interest rate hike. We do, however, expect one interest rate hike in the first half of the year. That's most likely in the second quarter. At the same time, against the backdrop of Goldilocks scenario, I think this will be a macroeconomic situation where we're conducive to asset price inflation. I think in the near term, the policy priority will be focused on how to rein in the rapid increase in property prices. I, in fact, expect a series of measures, regulatory measures, targeting at property sector will be rolled out by Chinese government.
Good morning, it's Karen here. I'm curious as to what's not hot about a double-digit growth figure for a quarter. Why are we being cultured into thinking that this isn't, extraordinary growth?
Well, this is extraordinary growth, but this has to do in part with the low base effect. We know that Q1 last year was the nadir of the crisis, and the Chinese economy basically had a hard landing. So this base effect explains part of the strong performance. Having said that, no doubt the recovery in Chinese economy has been quite strong. But at the same time, external environment remains uncertain and relatively weak. This external environment really helps contain inflationary pressure in China.
Qing Wang, just on that, if the inflation number is going to be a relatively benign one today, then at what point in the cycle does it start to become a threat? When should policymakers start worrying about inflation making a comeback in China?
Well, we expect inflation will creep up in the first half of the year, but we expect inflation will peak around mid-year, start to even decline in the second half of the year. So overall, we take a rather benign view of inflation, but we could be wrong in that inflation, instead of peaking around mid-year, keep going up. Then that will force Chinese policymakers to cut back monetary expansion drastically, which could cause economic growth slowdown. But that's not our base case forecast.
Even before today's data, Beijing authorities have issued concern about the pace of property price growth. Do you think a move on the reserve ratio is again imminent?
Well, I think indeed, I think the key policy challenge in facing Chinese policymakers at current juncture is not about control CPI inflation, rather about how to contain rapid property price increase. But to address this issue using typical monetary policy tool like a reserve ratio hike or interest rate hike is less effective. Instead, I expect Chinese government will rely on regulatory measures targeting specifically at a property sector. For instance, requiring higher down payment ratio for second mortgage, charging higher interest for second mortgage.
We're going to come back to you in just a few minutes. Stick around. Qing Wang is going to be back with us on the other side of a break as we count down to that barrage of data coming out of China in just 22 minutes and 53 seconds. Stay with us here on Squawk Box.
Attention, is this how you make currency trading decisions? There's a better way.
Welcome to G8 Forex. We forecast currencies.
Our team of international experts provides daily currency forecasts to hundreds of individuals and funds the world over.
Each day we forecast 5 currency pairs with clear buy and sell targets. For a free sample forecast, go to our website at g8forex.com.
Don't be one of these guys. Stop guessing and start knowing.
Go to G8 Forex and get tomorrow's currency prices today.
AA1 credit rating from Moody's. Voted #1 in financial reputation by Wall Street Journal Asia. OCBC Bank takes private banking to a new level with the acquisition of ING Asia Private Bank, consistently ranked top 5 global private bank in Asia by Asia Money. Welcome to Bank of Singapore, Asia's global private bank.
We're in the energy business, but we're also in the showing kids new worlds business and the startup capital for barbers business and the this won't hurt a bit business. Because we don't just work here, we live here. These are our families and our neighbors. And by changing lives, we're in more than the energy business. We're in the human energy business. Chevron.
How do you maximize returns in these volatile market conditions?
Buy the dip, if we do have one. Preserve capital in the West and grow in the East.
Energy is still an area we like. Technology stocks are likely to continue to do well.
Join CNBC's Cash Flow on Tuesday, Squawk Box on Wednesday, and Capital Connection on Thursday, as the best financial strategists and fund managers teach you how to protect your wealth. Only on CNBC. First in business worldwide.
This is CNBC.com News Now.
Toyota says it will extend a sales suspension of its Lexus GX460 model outside the United States following reports about safety concerns. Australia's MacArthur Coal has rejected a sweetened $3.45 billion takeover proposal from miner New Hope, saying the bid does not represent adequate premium for the company. And China's economy is expected to have grown 11.9% in the first quarter from a year earlier, marking its fastest pace in 3 years. The GDP figures are due very shortly. Details of all these stories and more only on CNBC.com.
Welcome back Thursday morning here on Squawk Box Asia. The leaders of the so-called BRIC nations, Brazil, Russia, India, China, are gathering in Brazil today ahead of a two-day summit. The heads of state are expected to call for a greater say in the global economy, but, and we'll say, unlike last year, they are unlikely to renew their push for a new international reserve currency. We're back with Qing Wang, Chief Economist, Greater China, Morgan Stanley. He joins us live from, stays with us live up in Hong Kong. Qing, are you surprised that they're pulling back on this push, calling for a new international reserve currency?
No, I'm not. Establishing an international reserve currency is going to take decades to complete, if possible. But the statement issued by BRICS in the last their meeting took place against backdrop of a very weak U.S. dollar. But since then, U.S. dollar has strengthened and stabilized, and U.S. dollar as a reserve currency, and this status has been reverted. So that's why I think BRIC countries focus less on the currency issue this time around.
Qing, the BRIC countries were wielding significantly more political power in the past, say, year than what they were previous to that. But what's changed in just the past few weeks has been the pace of economic recovery around the rest of Asia. Do you think the BRIC countries are losing some of their appeal and political clout because there's not this huge gap between their pace of growth and everyone else's now?
Well, I think the emergence of BRIC countries is a long-term phenomenon. And this crisis, of course, highlights the importance of BRIC countries. But for BRIC countries going to take a leadership of the global economy, it takes a long time to play out. I think going forward, we continue to expect BRIC countries to play a more influential role in the global economy, but we do not expect this can be firmly established in one or two meetings.
One way this could be achieved is perhaps by settlement of more trade in their own currencies. This was something that was discussed previously, but do you think there is some upside or reason for the likes of Brazil, Russia and India, so not just China, to discuss a move towards a greater use of their own currencies?
Well, this is going to be very difficult. The experience from the Eurozone give us a very good example. To build a common currency zone, one need not just economic cooperation, economic convergence. There is also a strong commitment from a political level. Given the diverse background and the situation and different stage of development of BRIC countries, I think it's even more difficult, much more challenging for the BRIC countries to develop some sort of common currency arrangement.
Qing, you know, the more say, influence that the BRIC countries are still wanting on the global stage, do you think that the right forum, the best forum is G20?
I still believe that G20 should be the best forum because, after all, despite the rise of BRIC countries, we still have major industrialized countries as the key player in the global economy. In fact, they are the bigger player in the global economy. Going forward, we should see more cooperation and collaboration among developed economies and BRIC countries. This is an important change, but it doesn't necessarily mean that BRIC country can take the leadership role from G7 countries, for instance.
Well, markets now have 15 minutes to wait for until this key data event today. We must say thank you and goodbye. Qing Wang is Chief Economist for Greater China at Morgan Stanley. Well, let's get a check on markets and some of the action in Seoul.